Live from Jersey City, here's another video about stock market basics. And today we're going to cover something near and dear to my heart. It's called short selling or selling the market. Obviously, people want to buy stocks that are going to go higher. But what happens if the stock market or particular stocks are going lower? How do you profit from that? Well, it's a little thing called short selling. And, we could call this short selling 101. And I'm going to start. I have my little Barron's dictionary here. And I'm just going to read you the definition. And then we'll discuss it a little bit and go from there. Short sale. 1, sale of a security not owned in anticipation of making a profit by purchasing the security later at a lower price and delivering the security in completion of the short sale. The trade is completed by delivery of a borrowed certificate that is delivered to the buyer, completing the transaction at the time of the original sale. Right? So what does that mean? So you're anticipating the price to be lower. Now, if you don't own the stock, then you have to borrow it from your broker. And brokers do this all the time. You have to have a certain margin requirement because essentially, a short sale is you're borrowing the stock that you don't have, you're selling it to someone else, and then you have to buy it back after the price move that you want occurred. And then that completes the transaction, and you keep the difference from the higher price that you sold it at versus the lower price that you bought it back at. On Wall Street, it's always buy low, sell high. Well, you can also sell high and buy low. All right, let me finish this. A regular way short sale occurs when the seller has no other position in the security. Excuse me. A short sale against the box occurs when the seller has an offsetting long position and wants to postpone tax losses until the following year. The box is securities industry jargon for securities owned by the seller, but held in safekeeping by a broker-dealer. So if you wanted to, let's say you made a profit in a particular stock and you wanted to short sale some of it, that'll protect your taxes for that particular year. That's a little bit more sophisticated, but that's the thing. Now, the other definition, number 2, in futures, taking a market position by selling a futures contract in a financial instrument not owned by the seller in anticipation of a price decline. So the futures market is a lot simpler. You're simply selling that contract to someone else and then buying it back at a lower price. As we know, futures are not stocks, but they trade like stocks generally. And, futures markets cover stocks. There's stock futures, there's commodity futures, oil, gold. There's soft commodities like cotton, lumber, all sorts of agricultural products, which I'm not going to get into, but you get the idea. You're anticipating that the price will go lower. And based on that, your bet is, okay, if I sell this thing now, what will the price be within a week, within a month, within a day, within a year? Will it be higher or lower? And will I profit from doing that? And now this is particularly sophisticated in terms of investing, but when the market's going down, it's a very good way to make money quickly. As an old Wall Street adage points out, the market usually takes the stairs up and the elevator down. And you might have seen that price action in the last couple of weeks on some particular stocks and some of the major indices. Obviously that's because of many things, including the impending election, which we're not going to get into that either, but obviously people are concerned one way or the other. So now I want to show you a couple of short sales that I recently did on my screen by sharing my screen here, if my mouse will cooperate. There we go. And here we go. And share. All right. So this is our good old friend Twitter, right? And so if you look on the app, I said to sell the stock short on the 22nd of October, right? And that's right over here. And the reason why I said that was because of this gap up. Hopefully you can see that on my chart. It gapped up there and there's a big hole there. And one of the things about stock markets is the people who are in charge of trading the different stocks like to fill those gaps. And that was an old thing. One of my mentors taught me was all gaps get filled. And now a market maker, for those of you who don't know, is a person who stands ready to execute buy and sell orders on behalf of customers or his own account or book, right? So if you've ever heard the expression, oh, that guy's just talking his book, that's because he probably is. Those are the stocks he holds, and that's what a book is. A market maker is someone who assumes trading risk by taking possession of the assets traded and who executes transactions at publicly quoted prices. A market maker's bid and ask spreads are not so large as to preclude transactions at the prices quoted. In organized exchanges, such as the stock market or futures market, market makers are licensed by a regulating body or by the exchange itself. So that's a market maker. So that's the guy that executes your order on the other side of the computer, whether you've ever met him or not. That's his job. So on the market maker's book, there are probably shares within this little gap here, right? And as you can see what happened, you know, I thought Twitter would fill the gap, and it created this really interesting pattern. This was their earnings from yesterday, and their subscriber numbers were bad for various reasons, which I won't get into. But as you can see, the stock is down about 20% today. And at the time of the call, I thought it could retest that moving average. That's your 50-day moving average right there. And we're well below it right now. So that's an example of a short sale that actually worked. I'm going to give you another one while we're on the subject because I like this one particularly. And this is Apple. And I did that back 13 October 2020, which is way back here. There we go. And that was after their big event because they released, a few new gimmicks, but nothing exciting. And I thought, okay, you know what? Apple's had a nice run, and I think it's going lower. I initiated the sale at $122.25, and I thought it would go down to $118. And boy, was I wrong about the $118 because now we're at $108. So I got out, took some of my profits at 118, kept the other half, and I'm thinking about getting out by the end of today because that was another short sale. That worked. And these don't always work, and that's why you want to have stops, because the problem with short sales is you could lose money to infinity if the stock keeps going up. That's the one problem. That's why a lot of people, don't try to do this at home. They let professionals do it. But, with a little guidance, you can make money doing it. And, especially after you're more acquainted with markets and how they work. It's a very valid strategy to make money, right? All right, now we've seen enough of that graph. And so those are two recent examples of where I was able to borrow the stock from my broker, sell it to someone else, and then subsequently you can buy it back at a cheaper price and keep the difference. And that's the essence of short selling. There's really not much more to it other than the fact that if the stock goes in the wrong direction and keeps going up, because you have a margin account that you're using, if you run out of money on that short sale, then you have to pay the margin clerk. And when they start calling you up and sending you emails, that's not fun news to get. So if you've never short sailed before, learn about it. This is by no means the definitive video on it, but I just wanted to get into that little gap trading. Now, conversely, if you want to buy a stock, if it gaps down, and you could see that big gap there where it didn't trade at that range of prices, sometimes it's a good time to buy the stock, because the market maker is going to want to fill that gap to make sure that he's got all the inventory at that book taken care of, so he's not stuck holding the bag, if you get how that works. All right, so that's a little bit about short selling. We're going through some interesting times right now in the market, and it might be a tool that you can put in your arsenal. But that's all I have for today's video. I will see you again soon.